Hello there, welcome to David's Investment Analysis channel. Today I'm very excited to be talking about another special purpose acquisition company, and this time it's Spartan Energy Acquisition Corp, which is an affiliate sponsored by Apollo Global Management. It is planning to merge with Fisker Inc, an EV automaker. Upon closing of the transaction, Fisker will then be publicly traded on the New York Stock Exchange. Prior to the merger announcement, there were already rumors, and we saw the stock price went from $10 to over $16. And after the announcement, the stock price went from $16.70 to closing today at $14.80. In the next bit, I'll be discussing about Fisker, what they do, and how they earn income. Then I'll assess the qualitative aspects of the business, and followed by a quantitative analysis looking at the financials and valuation of the company. Then I'll conclude on whether I think the stock is a buy at its current price and whether I own any shares of the business. I do spend a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And if you do not want to miss out on a future video, please do subscribe and click the bell notification. And if there's any other companies you'd like me to cover in the future, please do leave in the comments below. Now let's get to it. Fisker Inc. is an American electric vehicle automaker founded by Henrik Fisker, launched in 2016 and based in Southern California. Fisker Inc. is the relaunch of Fisker brand previously known as Fisker Automotive, which was founded by Henrik Fisker in 2007 that produced the Fisker Karma. The company strives to produce zero-emission vehicles that use sustainable materials and green technologies. There's 3 vehicles that Fisker Inc. have worked on. The first one is Fisker Orbit, which is an autonomous, connected electric shuttle designed for smart cities. Fisker partnered with Hakim Unit Group and Protein Electric on this project. The shuttles are intended to be used for short, shared trips in college and corporate campuses, airports, resorts, and smart city centers. It will hold between 8 and 12 people depending on the configuration with standing and sitting room. The first test vehicles was projected to run at corporate campus in the US in 2019. The second one is Fisker Emotion, which is an all-electric sports sedan designed by Henrik Fisker. The Emotion is stated to run approximately 400 miles on a single charge, with top speed at 161 miles per hour and could go from 0 to 60 in 3 seconds. The car will be equipped with a solid-state battery being developed by Fisker Inc. The solid-state battery is expected to yield ranges over 400 miles per charge and with 1 minute charge time, which would be the longest range electric vehicle to date. The car was named the best car in Consumer Electronics Show in 2018 by PC Magazine. The vehicle is expected to be priced around $129,000 for the base model. The vehicle is expected to be available for delivery in 2023 as the company works on the solid-state battery technology. And the last one is Fisker Ocean, all-electric SUV with a range between 250 to 300 miles. The SUV will be offered in both rear and all-wheel drive. The vehicle will be powered by lithium-ion battery pack with greater than 80 kWh and an optional solar panel roof as a range extender. It is said that the Ocean can go from 0 to 60 miles per hour in less than 3 seconds, which is quite impressive. In addition, the SUV will be a sustainable vehicle using recycled plastic from ocean debris and vegan leather. Following its appearance at the 2020 Consumer Electronics Show in Las Vegas, the Fisker Ocean was named the best at CES 2020 list by publications including Newsweek, Time, CNET, Digital Trends, Business Insider, PC Magazine, and Mashable. This vehicle will be Fisker's first to be delivered and is expected to be delivered in the 4th quarter of 2022. As of June 24, 2020, they had over 25,000 soft orders from 118 countries and over 5,500 hard orders from 32 countries, totaling $1.5 billion of potential revenue. Now let's look at some of the qualitative factors, and we'll look at the management team first. The combined company board of directors will be comprised of existing Fisker board members and Apollo designee. Spartan Energy Acquisition Corp is sponsored by an affiliate of Apollo Global Management Inc. And Apollo is a leading global alternative investment manager with approximately 316 billion assets under management. Apollo has strong knowledge and resources to help Fisker become successful. Let's look at the CEO. The CEO of Fisker is Henrik Fisker. He is an automotive designer and entrepreneur and is best known for designing luxury cars including BMW Z8, Aston Martin DB9, Aston Martin V8 Vantage. He's also the board member of Aston Martin. He is the founder of HF Design, founder of VLF Automotive, founder and former CEO of Fisker Coach Build, and founder of Fisker Automotive, where he served as chairman and CEO until March 2013. A bit about Fisker Automotive. Fisker Automotive was an American company known for producing Fisker Karma, which was one of the world's first production of luxury plug-in hybrid electric vehicles. It debuted in 2008 and had first deliveries in 2011. However, production of Fisker Karma was suspended in November 2012 due to the bankruptcy of its battery supplier A123 Systems. Soon after, Fisker also filed for Chapter 11 and sold its Karma vehicle design, tooling and manufacturing facility in Delaware to a Chinese auto parts conglomerate, Wangxian Group. The failure of Fisker Automotive does raise a red flag as to the strength of the management team, but I certainly hope that Henrik Fisker would learn from the mistakes of Fisker Automotive to help Fisker Inc. succeed. Let's look at the industry outlook. After entering commercial markets in the first half of the decade, electric car sales have soared. Only about 17,000 electric vehicles were on the streets in 2010, and by 2019, the number had increased to approximately 7.2 million. What you see here is two scenarios. One on the left incorporates existing government policies, and on the right, following sustainable development and climate goals. That's growing around 25 to 40% annually between these two scenarios. And as per research by Adley Market Research, the global electric vehicle market was valued at $162.34 billion in 2019, and is projected to reach $802.81 billion by 2027, registering a compound annual growth rate of 22.6%. North America and Europe are expected to witness considerable compound annual growth rates of 27.5% and 25.3% respectively during 2020 to 2027. The cumulative share of these two segments was 40.1% in 2019, is anticipated to reach 51% by 2027. And per markets, electric vehicles market is projected to reach 27 million units sold by 2030 from an estimated 3.3 million in 2019, representing a compound annual growth rate of 21.1% between 2019 and 2030. The growth is driven by proactive government initiatives including subsidies, grants, and rebates and technological advancements. In addition, the demand for fuel-efficient, high-performance, and low-emission vehicles, along with stringent government rules and regulations toward vehicle emissions, also drives the growth of the industry. Fisker stands to benefit from the growing industry globally. We can see here how it compares to other competitors within the industry. It suggests that Fisker Ocean will be a highly competitive, premium yet affordable all-electric SUV. The market growth is expected to be around 30% annually. This is slightly higher than what we looked at earlier, but it does sound reasonable. We can also see that the SUV segment has increased over the last 8 years, while the car segment decreased. This suggests a positive outlook for Fisker Ocean SUV. Let's look at some of the interesting facts about Fisker, including its business model. Fisker's business model is to be the world's first digital car company, and through these 4 pillars: legendary and award-winning design, platform sharing world's most advanced EV platform, OEM partner, manufacturing logistics supply chain, and digital sales and service experience. Looking at the first pillar, legendary and award-winning design. The Ocean SUV is designed by Henrik Fisker, an award-winning designer. To me, the Fisker Ocean looks very modern and very sleek. I like how it looks. The prototype was built by Volkswagen's Ital Design. Some of the selling points include photovoltaic solar roof, expected to be the world's most sustainable vehicle, unique cellular interface on large curved screen, largest interior space for vehicle size, and 16-inch large curved screen and a full-color augmented head-up display. Looking at the second pillar, platform sharing. Volkswagen and Fisker are in negotiations for Fisker to access Volkswagen's MEB electric vehicle platform. Being on the platform, Fisker can leverage the technologies and economies of scale that will allow Fisker to enter the market approximately half the time with costs substantially reduced, relative to a vertically integrated business model, where the business model is the company itself supplies all the parts. It is also anticipated that the partnership will drive sustainable advantage for Fisker, that will be able to streamline its business model and mitigate significant risk for Fisker Ocean development and production. Third pillar, OEM partner. Fisker is planning to partner with the OEM for the manufacture of its Fisker Ocean. The company believes that some OEM suffers from an estimated 20% of overcapacity, and partnering out them would be a win-win situation for both Fisker and the OEM. Fisker is in negotiations with Volkswagen to secure a source of battery supply, and Volkswagen is recognized as one of the largest battery procurement supply contracts, and their batteries have been fully developed and tested through their MEB platform. Fourth pillar, digital sales and service experience. Per KPMG, 75% of consumers prefer to complete their purchase, trade-in, finance, and deliver a transaction digitally and remotely. And Fisker stands to benefit from this with their Flexi app that can configure vehicle, make purchases, schedule services, onboard diagnostics, schedule vehicle pickup, digital key, insurance, and payments and trade-in. Fisker offers flexible lease terms, suggesting favorable affordable lease costs at $379 per month, compared to other comparables at $523 and $915. Fisker offers high mileage allowance of 30,000 miles a year compared to other comparables at 15,000 miles a year. Fisker also offers no fixed term and the ability to cancel anytime. It would be very interesting to see what happens if a consumer stops leasing after a month. The value of the vehicle will significantly drop after the vehicle is off their lots. Fisker also plans to open several brand experience centers across the US for consumers to learn about its brand, test drive, learn about the vehicle, and build relationships. Fisker is expected to partner with Pivot that provides end-to-end vehicle services. Consumers can schedule their appointment through the app, and the service will be performed at Pivot facilities and the vehicle will be returned to consumers. There are 78 US locations and 108 global locations. There are many charging stations across the US, with ultra-fast charging station more to come in the next several years. Some of the other interesting facts. Fisker has over 150 trademarks and patents globally and is expected to grow to 500 in the future. They currently have one vehicle that they are working on, but they expect to grow that to 8 vehicles in the future. What you see here is the timeline of when they expect to start deliveries, with the first vehicle of Fisker Ocean in the fourth quarter of 2022. Let's look at some of the risks. Some of the items that would hinder the global growth of electric vehicles include the lack of standardization of charging infrastructure, the general higher cost of EVs compared to internal combustion engine vehicles, stringent rules for installation of charging stations, and limited range of EVs. These all present a risk for Fisker. Another risk is the huge reliance on partnership with Volkswagen. It is planned that Fisker will leverage Volkswagen's MEB platform for technology including battery and economies of scale. And it appears that they are in discussions to manufacture the Fisker Ocean at Volkswagen's manufacturing facility as well. And there is a risk that an agreement is not signed and they would scramble to find alternatives that would lead to delay in production. Another risk is the execution risk. The company is relatively small and new and does not have any vehicles in production yet. There are a lot of execution risks that are involved in carrying out the plans from sourcing to manufacturing to storing to delivering the vehicles. Especially these all can come from different providers. The sourcing of parts, supplies, and manufacturing can likely save costs up front, but Fisker is likely having to pay a higher margin on them. Looking at NIO as an example, they also outsource their manufacturing, and they currently have a negative gross margin. This means that it costs them more to make the vehicle than the price that they sell the vehicle for. It would be very interesting to see what the margins are like in the future for Fisker, especially at its current suggested price. Also, because the manufacturing is outsourced, it would be very difficult to control the quality of the vehicles being manufactured. Another risk is with the transaction. It is not yet finalized and the transaction won't be closed until sometime in the fourth quarter of 2020, and then the deal would require shareholder approval and subject to several closing conditions. And some deals do fall apart, and if this deal falls apart, the stock price will go back to $10. Now let's look at some of the quantitative analysis. Looking at the summary of the financial projections, it is expected that the units produced will increase from 8,000 in 2022 to 225,000 in 2025. And the total revenue will increase from $600 million in 2022 to $13.2 billion in 2025. It is also expected that EBITDA margins will improve from 4% to 21%, and from break-even EBITDA in 2022 to $2.8 billion in 2025, and negative cash flow in 2022 to positive cash flow of $1.9 billion in 2025. These are amazing growth numbers presented by management. It would be pretty incredible if they can achieve these projections. The anticipated gross margins on Ocean is expected to be 5 to 7.5% on the base model and 29 to 33% on the extreme model. It would be very interesting to see if they can achieve these margins. Fisker is expected to have sufficient cash from the PIPE financing and SPAQ merger to fully fund Fisker through the start of production, which is anticipated to be the fourth quarter of 2022. Looking at the pro forma valuation of the merger deal, the pro forma enterprise value of the company is at $1.9 billion based on 0.6 times 2023 estimated revenue of $3.3 billion. And 4.3 times 2023 estimated adjusted EBITDA of $441 million. With the cash available of approximately $1 billion, the pro forma equity would be approximately $2.9 billion. They've also secured $500 million in PIPE commitment plus $569 million in cash from the SPAC plus $50 million from Series C investment, less $79 million in estimated transaction fees will provide approximately $1 billion to the balance sheet of the combined company. Like mentioned earlier, the $1 billion is expected to fund the operations of the business and should be sufficient until the start of production near the end of 2022. Existing Fisker shareholders will receive approximately 60% of the combined company, and the SPAC investors will receive approximately 19% of the combined company. The management's valuation of the merger appears to be cheaper than Nikola's merger deal and Tesla's IPO valuation when comparing to EV to revenue and EV to EBITDA ratios. One item I do want to point out is the growth expected in 2022 to 2023 of 497% growth. This can be true because deliveries start at the end of 2022. Comparing revenue growth and EBITDA margin, we can see here the expected compound annual growth rate of Fisker is 99.8%, similar to that of Nikola. What you see here is not the best comparison to NIO or Tesla because they are looking at 2019 to 2021 revenue growth. Fisker is projecting to have a positive EBITDA margin of 13%, which is pretty good in such a short time. Again, not the best comparison with NIO and Tesla because that's looking at 2021 estimated EBITDA. Looking at Fisker's merger valuation compared to Nikola's merger valuation, it trades at a discount, valuing the company at 0.6 times 2023 estimated sales and 4.3 times 2023 estimated EBITDA. Not a very good comparison to NIO and Tesla, as the numbers here represent 2021 estimated revenues and EBITDA. Let's look at more comparative numbers with comparable companies. The current market cap of Hyliion is around 3.8 billion, Nikola is around 19.7 billion, NIO is around 15.4 billion, and Tesla is around 287.3 billion, and Fisker is approximately 4.3 billion. Looking at the price to estimated sales ratio, Fisker's valuation is the cheapest amongst the group. The valuation uses 600 million for estimated 2022 sales, 3.3 billion for estimated 2023 sales, and 10.6 billion for estimated 2024 sales. If they can reach these projections, the valuation of Fisker would appear very attractive. And if it even trades at the same valuation of Hyliion at 1.8 times 2024 sales, the nearest comparable valuation, the price of the shares would trade at $64.92. And if it trades at the same valuation as Hyliion at 3.7 times estimated 2023 sales, the price of the shares would trade at $41.48. And for something interesting, if we use the same valuation as Nikola at 6.11 times 2024 sales, the price of the shares would trade at $220.15. While the valuation appears very attractive, but please note these valuations are based on Imagin's projections of revenue. Interested investors should consider whether these projections are reasonable and apply some level of margin of safety. Conclusion. In my opinion, at today's price of $14.80, I think it is a speculative buy because of the following reasons. Fisker is in the EV industry that is expected to grow 20 to 30% annually, so the opportunity would be there for Fisker to grow. There's a lot of excitement for this industry, and with the recent huge surge in EV stocks like Hyliion, NIO, Nikola, and Tesla, Fisker is now another option. I believe there is enough demand for several successful EV companies that can coexist in the industry. Fisker has some amazing projections and is set to grow faster than industry, suggesting that it will take market share from other competitors. Henrik Fisker, who is the CEO, is an award-winning designer that will have the best designs for their upcoming vehicles. They also have the knowledge and resource support from Apollo Global Management. Fisker Ocean is expected to be the world's most sustainable vehicle, using recycled rubber from tire manufacturing waste, evo-suede interior made from recycled polyester, and carpets made from fishing nets and bottles recycled from ocean waste. Fisker is also in negotiations with Volkswagen to use their MEB electric vehicle platform, sourcing of parts, and manufacturing capabilities, which will reduce time and cost for Fisker. Fisker developed Flexi app to provide consumers with a digital experience, from configuring and purchasing the vehicle to scheduling for service and pickup. They also have very reasonable valuation compared to competitors, with $1 billion of cash on the balance sheet used to bring Fisker Ocean to production. I do have some concerns, and they include the following. The failure of Fisker Automotive presents a risk with management team's ability to run the successful public company and executing on the plans discussed previously. Having said that, perhaps a second time is a charm, and this time they have strong resources to help them succeed. Another risk is the lack of standardization of charging infrastructure, the general higher cost of EVs, stringent rules for installation of charging stations, and limited range of EVs present a risk to slow the growth of EV industry. The growth potential looks very promising, but reminds you that the company currently doesn't have any sales and these projections are only estimates and can be very different from reality. There's a huge reliance on a partnership with Volkswagen, and there's no definitive agreement signed as of yet. Many of the functions are outsourced, so it would be interesting to see how it hurts margins and how Fisker can control the quality of the vehicles being manufactured. Despite the reasonable valuation, if the deal does fall apart, the shares would go back to $10. The transaction is still subject to shareholder approval and closing conditions. Disclosure. I currently do not own any shares of SPAQ, and I haven't decided on whether I'd be buying any shares, as I'm not sure how I feel about a couple of the risks. But I do think the company is a great company in the right industry with the right resources and have really great projections. And if they could execute on what they planned, I believe the stock price would go up significantly. That's it for now. I spent a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And if you do not want to miss out on any future videos, please do subscribe and click the bell notification. Thank you for watching. Until then, see you next time.